Welcome everyone, it's the Crypto Lark and I'm super excited to be talking today with Tom from Crypto Gurus. How's it going?
Fantastic. Absolute pleasure to be here and to be chatting with you.
Thank you very much, and I'm very excited to be chatting with you as well. And I think we're just going to jump right into talking about all kinds of exciting stuff. And we're going to be talking a lot about security tokens and ICOs and all this stuff today, but I think let's start off with a provocative question. Is the ICO dead?
That's a tough one. I certainly have some very contentious opinions on this. I think that there's a few ways I potentially see this. Utility tokens and security tokens are very different in that I think, so Mav from Ready Set Crypto said this beautifully the other day. He said utility tokens are trying to do too much. They do a job within an ecosystem. They're the fuel and they are absolutely essential. They are the ability to create incentives so people act in a decentralized way and do the right thing and avoid doing the wrong thing. And they are so incredibly useful. But at the same time, does that mean they have inherent value? Because if they don't have inherent value, why are you selling them during an ICO and essentially sticking a value on them and saying they're worth this much? That's what it really comes down to. Is there an inherent value for the utility token? So within that, there are so many different types of utility tokens that I personally think 99% of them either shouldn't have any inherent value whatsoever, or it should be low because they haven't addressed token use correctly, or they haven't, or even when they've done that, they haven't addressed token velocity. And that's something which is incredibly overlooked. So are ICOs dead? I think there is a use case for some. Some utility tokens do have inherent value, such as discount tokens, but I don't think the market acceptance is there right now, put it that way. And I don't realistically see it returning anytime soon.
I think ICOs are evolving, and that's probably the best thing that can happen to them because the ICO of the past was very problematic and for a lot of the reasons that you mentioned here. And I think one of the big ways where these companies totally failed was they overvalued their token, they raised too much money, and they weren't able to deliver any kind of community or platform or demand after that. And we can look at the BNB token, right? That's a company that nailed it and got it right. They were able to attract enough users to their platform, and that platform token actually became useful because it has an actual use on the platform as a discount token, right? And there's a few other things you can do with the BNB token, but when you look at that, that's maintained strong growth over time because it has people who want to buy it. But so many of these utility tokens that came out had no community, had no one who wants to buy it. They have, hey, our platform is going to launch in 2 years. And it's like, that's cool, but why are you having this token release now? Why, if there's no one there that's going to be needing it? And that's the real problem with a lot of these ICOs is that there was no use case for the tokens when they came to the market beyond speculation, Moon Lambo stuff, and that's why we've seen so many of these ICOs crash so brutally because there's no one that wants to buy the tokens because there's no use for them in the real world at the moment.
Yeah, exactly. And the question of whether it returns or not really comes down again to speculation. Because as you say, most of these systems, even the best decentralized applications, like we take a step back, they're still tiny. They're nowhere near mainstream adoption. And yet we're talking about companies valuing their tokens, which don't necessarily have an inherent value, at 20, 30 million sometimes. When you look at how venture capital works, and you raise in a seed round, and then you do Series A, Series B, Series C, it is a crazy difference. We're talking about equity within a company, which should be far more valuable than the token being sold by that company, which still has equity. And they usually start off at, say, a $1 million valuation. And then they work their way up over the course of, say, a few years. And most companies then are trying to get to 10 to 20 after they've proven themselves and they've raised money at 4 or 5 different valuations and they've justified it each time and they've hit various milestones between each raise. To raise 20, 30 million off of the back of a token which we don't even know is worth anything is utter madness. So the only thing that can bring it back is madness within the market. And how do we get madness within the market? we have a $20,000 Bitcoin. But to get to a $20,000 Bitcoin, we sort of have to have madness within the market.
Mm-hmm.
So now we're in a system where we're trying to figure out what's going to spur us to essentially be in a bull market again. And I don't want to jump the gun by talking about other topics, but for me at least, it is not ICOs.
The ICO boom that we saw previously, it's not going to repeat itself in the way, there's not going to be another ICO boom that was just like the one that happened. It's, like I said, we're evolving, it's moving on. We're going to see different iterations of token sales. And I think you brought up a really good point about how capital's traditionally raised versus where capital's going now. Because a lot of these, this is the crazy thing that maybe not a lot of people realize, is that when you look at a website and you see, oh, all these big investors have invested in this company. I've even interviewed people before and they said, okay, well, you have, the Winklevoss twins are invested in your project. Did they take equity or did they take tokens? And this is something that not a lot of people may be aware of, and it's very non-transparent. This is an unfortunate part of the ICO market that hey, it's blockchain, we're supposed to be bringing transparency to the world, and the ICOs themselves are incredibly opaque, and that's problematic. But we do see a lot of these big venture capitals and angel investors, they're taking equity in these companies. So yes, they did invest, but they're not going anywhere near the damn tokens, and that is problematic because it says that the investors don't value the tokens, the company doesn't value the tokens because they're not forcing these investors to take the tokens, but they're trying to push them on the general public. So there has been a lot of malfeasance in the ICO space. How can we make it better? Because the idea itself isn't broken, right? It's the implementation that we've seen that has been broken. How can we make ICOs better moving forward? Or do you think we should scrap the ICO and go to the STO?
Oh, this is going to be contentious. I don't see there being that much of a need for most ICOs. I think STOs represent something, it's entirely different. Even though they're utility and security tokens, they sound similar. They're entirely unrelated things, really. It's just using blockchain to represent something. That's why we have the word token. A security is totally different to a utility. There is undeniably inherent value to a security. You literally own the underlying company. And you have the rights to future dividends. You have the rights to vote. If they close the company, you get the rights to some of the distributions. Your tokens may not even go to zero. There is so much value there. And yet companies chose to sell utility tokens. They could have sold their equity. It's because, for most cases, why would you sell equity when you could sell this utility token and retain all of your equity? I think the market is going to wisen up to that. I don't think it's necessarily happened yet, but I think I'm talking to people and I'm seeing this progression where people are understanding security tokens may be a better option for investments than utility tokens. Maybe not for the 5 times flip in 24 hours because they won't have the liquidity, but if we're talking long term. So if we're moving away from, if we're having companies that are still potentially having a utility token, but choosing to go down the security token offering route, I personally prefer the model of giving tokens away in some sort of airdrop model. I think if most don't have an inherent value, it's immoral to be selling them. If I have this glass of water and I know that I can pour it out the tap and I can get it for virtually free, I shouldn't sell it to someone. That's not moral. If I have something and I have value in my equity, I don't need to sell my utility tokens for a crazy valuation. I would personally prefer to see some sort of a STO model combined with an airdrop. Do I think it's realistically going to happen? I think where companies can get away with not selling equity and raising capital, we will always see it. I don't think we'll ever get away from that model until the market forces them to move away.
I think one of the big things that comes down here too is actual user demand. If people are out there willing to buy utility tokens with no underlying inherent value and no use case and no platform, no existing user base, all that stuff, then companies are going to continue selling them. But we as a community can try to demand more. But as soon as the bull run comes back, and it's inevitable at some point, right? When that happens, we're going to get a whole flood of new retail investors in that aren't going to ask these kind of questions. And I actually was thinking of a good analogy. Most utility tokens are the equivalent of buying air points for an airline, right? So I've got Air New Zealand air points, but I'm not that's not Air New Zealand stocks in the company, which of course are inherently more valuable. So if Air New Zealand comes out and says, hey, we're going to be selling air points for 10 cents on the dollar, I'd go, wow, that's really cool because I like Air New Zealand. Now, we have seen the reverse ICO happening that's been more popular in Korea, for example, where we have seen existing companies basically offering tokens to get their services if you invest in that token sale at a discount. So you can get it for cheaper potentially, but then of course even some of those tokens have come to the market and suffered the inevitability that most of their clients don't want to pay them in cryptocurrencies. Do you think there's any use case currently for the reverse ICO, or do you think that's something that might be more popular in the future as big companies do things like air points, but tokenized?
To be honest with you, I've been focused, as I told you before, so heavily on STOs recently that I've pretty much ignored every bit of research I should be doing for anything else. Tell me more about reverse ICOs.
Well, it's really simple. It's basically an existing company, and they'll issue a token for a service that they're offering. I mean, I reviewed one about 6 months ago.
Can I jump in? Issue or sell?
Sell.
Okay.
So I issued, I reviewed one about 6 months ago, and it was a security company, and so they do internet security, and so they're basically selling the tokens, and so you could use those tokens, and basically it was a way to buy their services later on, right? But theoretically, you could get it for cheaper by buying the token if the token goes up in value, but the token went down in value because there wasn't that demand there organically from their customers to actually be running out and paying for these security services, internet security services in tokens. So again, it's the part of it, just we're not ready in a lot of ways for these crypto economies that people are trying to build, the crypto economies they want to see, right? We've seen the BNB token has been so popular because there's a demand for it. And I think the gaming tokens are actually going to be really, really popular because the gamers are a little more willing to do things like play around with cryptographic assets, especially if there's like, hey, this sword that you have has, $200 in cryptocurrency locked up in it. People are going to take the time to find out how to get that out. Whereas going out and trying to, okay, I want to pay for my internet security services. I get a 5% discount if I do KYC and go to this exchange and buy these cryptocurrencies. And by the time I actually get around to paying them, they might have gone down 10% in value. So now I'm actually paying more than I was originally trying to pay. That's probably.
And how difficult is that? How many steps did you have to describe? Whereas you could just go to a regular company and forget about the utility token. There are so many businesses. Yeah, there are so many businesses that are just putting all of these extra layers in our way, and they're issuing a utility token and saying these layers mean that it gives value to the utility token. If you take a step back, a business which isn't doing that is more likely to succeed. Therefore, a lot of the value that should go to that utility token is going to a different business. And if you're running a company and you realize one of the reasons we're struggling is because we've shoehorned a utility token in where we don't need it, and now it's causing this friction, your first step is to take it out. Why would you let your business fail? You're going to get rid of that utility token. There is no guarantee that any investor has. There's no legal contract. There's no government regulators that are going to support them. Companies can do what they want with these utility tokens. And at the end of the day, the investors have no backup. There's no support for them. And I think that there is a use case for it. But when we talk about the example there, so I don't know the company, but it very much sounds like they're forcing a utility token into a model which has worked in the past and has no real need for it right now.
That's it. And well, the interesting thing too is I've talked to companies who, on the face of it, they advertise, well, if you get services on our platform, you have to pay on our utility token. And I've talked to them about, well, can I get your services or whatever? They say, oh, yeah, I can just pay in Bitcoin or Ethereum. I'm like, wait a second. Can I pay in your token? I'm like, well, yeah, I guess you can. But that's the thing. There's no regulation. There's no enforcement. There's no mechanism in most cases to ensure that this is happening. Where again, we can take it back to the BNB token. You just set it on the website and it automatically deducts it from your fees. And that's got enforcement mechanisms, right? Whereas a lot of these kind of more nebulous services that are on offer, like, oh, we're going to do internet security, for example. And look, I haven't looked at that project in 6 months, so I'm not making any comment on them. But just as an example, the enforcement mechanism for that platform to make people pay in their token, those enforcements are often quite weak, and therefore we see the weak demand for the tokens. Now,
Yeah.
there's been a lot of discussion in just the past couple of days about the IEO, so the initial exchange offering. Now, this is something Binance actually launched right at its inception, but because of different rule changes, basically Tron, I think, was the only one that happened, and they had to refund all Chinese investors. But now they've actually come back to the IEO. And we've seen BitTorrent, we've seen a couple other IEOs
Hmm.
coming out on Binance, and they've obviously done very well because Binance is incredibly popular and demand was through the roof for these. But we've seen Bittrex is doing it, Huobi's doing it, KuCoin's doing it. They've all announced in the past couple of days. Liquid.com has been doing it for a long time. Do you think this is kind of the future of how people are going to invest in these kind of crowd sales via the exchanges?
In a way, I hope so. In another way, I really hope not. I like the idea of, instead of going to a random person who sets up a website and sending money to a random address, I like the idea of having a recognized exchange, which essentially acts as a very low cost middleman. I think there's, at this point in time, very much a use case for it. What I don't necessarily like is that people are looking at the market and saying, we're headed in this direction. How can I make profits? And they're seeing Binance Launchpad and Tron just shot up in value. The same thing happened with FET shortly afterwards. I know that I think it's Seller are going to be on there soon. And there is so much talk already. People aren't even looking at the project. They're just saying it's another Binance Launchpad project. So we need to make sure we get in. And therefore, you have this situation where tokens will sell out in under a minute because everyone wants to get in. And then everyone will want to buy tokens shortly afterwards because we all know a similar pattern where you might get a decent return in the first 24 hours. And then you have another pattern, which is where everyone wants to get out because they know after that hype is gone, we now have a horrendous crash. In those situations, I think the people that do worst are the retail investors. The people that do best are probably venture capital, to be honest with you. So you mentioned earlier, venture capital tends to take equity. They also often take tokens in these situations. And I'm sure with these companies, along with their equity, they've taken tokens knowing that Binance Launchpad is coming. I don't like that model. So I think it's great to have some sort of middleman, but I don't like the way the market has naturally pushed it.
It depends on the sale too. I know with Seller, for example, that the venture capital people, they're not going to be able to actually take part in that early. They actually paid twice as much as it's going for on Binance Launchpad, which is interesting. But they're going to have token locks that are basically going to ensure that maybe they'll get like a third of their tokens or something initially, but most of their tokens they're not going to get. So venture capital does take a risk in terms of when they do token deals, and they do token deals a lot more than many may realize. And there's a lot of equity deals too, and that's never advertised, but they do definitely take tokens. And when they do take tokens, the terms can often be quite risky for them. You know, they might have 6-month or 1-year lockups, and that's, you know, in crypto token land, that can be quite crazy for these companies. So there is that. But yeah, I'm totally with you. I think in terms of security, it's so much. I mean, there's been so many ICOs that like the Telegram gets swarmed with scammers, or the website gets hacked at the last minute, or their email gets compromised or whatever, and then, you know, millions of dollars are scammed, and the company's like, oh, whoops, did we lose millions of dollars of investor money because of our bad security practices? Our bad. And that's repeated for a lot of ICOs. So this is definitely great in terms of security. And I think as more exchanges do it, there will be less hype around it. And so again, this is the thing, is you made the perfect point. And look, Seller is a good enough project. I've reviewed Seller. It's fine. It's, you know, doing cool things in terms of like second layer scaling and stuff like this, but most people don't know that. Most people will never know that. They just, it's like you said, it's on Binance, I have to get in, I'm going to double or triple or quadruple my money, and then I get out. And that's not what we want to see. That's just the crazy speculation, right? We want actual value to be created here, which of course brings us to STOs.
Yeah. What would you like to specifically talk about?
Well, let's start off by talking about, what do you think is the best use case for STOs? You know, is it tokenizing property? Is it shares in a company? What do you think is going to be one of the real killer use cases of the STO?
That's a fantastic question. I think I almost see it on a timeline. So I think tokenizing real estate is huge. It's total value of $220 trillion worldwide estimated, and it's an incredibly illiquid market for the vast majority. There is huge opportunity anytime you don't have liquidity and you can provide liquidity through tokenization. For me, that's number 1, 2, and 3. That's bigger than everything else combined. Real estate, I see huge in the future. I don't realistically see why like a $5 million company should be listed on an exchange and should have a trading volume on a daily basis. It's not healthy for the company valuation. It's not how venture capital has ever worked. And it doesn't really make sense for this to occur just because we can. I think a lot of people are looking at early stage companies as the first big thing, and I'm not actually convinced that should ever potentially occur. For me, the first big one is its funds. So it's being able to get into a venture capital fund or a real estate fund, any type of fund that you really like, with an incredibly low minimum. So in the past, most venture capital funds, if you don't have $100,000 in the bank, you're not getting in. And for the vast majority of us, that's a joke. Whereas you can create a crowdfunding system and you can do it very low cost. And now you can reduce the minimums to $5,000. And some people may not have that. Some people may do. It certainly opens up a huge barrier to entry, which most people have kind of struggled with in the past. So that's what I think. I think real estate, huge for the future, because anything without liquidity is an obvious point of disruption. Early stage companies, which everyone is talking about, I'm not that keen on. And the thing which a lot of people are overlooking is actually funds for me. What about you?
Yeah, I think it's definitely comes down to real estate's probably the big one for me. And then I think more existing companies that are not at publicly listed stages yet, but they're like exactly like the medium-sized companies that they want something new. They want something where they can actually come in and get cheaper fees. Because I mean, an IPO can cost 7 to 10% of the total IPO listing, and that's like we're talking hundreds of millions to billions of dollars for some companies, right? Or even if it's tens of millions, that's still highly significant for a medium-sized company when they could go to a tokenization platform and do it for 2 or 3%, for example. So that's very disruptive in terms of how competitive they're going to be. So that's definitely something I'm looking at as well. And I think you bring up some great points that the startup company thing, it's going to be there, but it's not going to be the big use case that a lot of people think it is. I mean, that's kind of where our ICO market is. It's a lot of speculation and, you know, things being publicly traded on exchanges, where a lot of the STO platforms that we've seen and that we're looking at, they're actually saying, well, it's not so much about getting exchange listings and stuff for these companies. It's about companies being able to issue these out to select groups of investors in order to provide that utility to keep the fees down, et cetera, et cetera. And there will be some marketplaces, but those marketplaces might even end up being kind of walled gardens where basically you have to be an accredited investor and go through KYC and all these different things. So it's going to be very different to the ICO boom.
That actually, you raise a really interesting point there. And this is something I've heard a few times. I can't really get my head around. It's people's looking at saying STOs are good for raising capital for early stage companies. Maybe they don't want to be on an exchange and they don't want that daily trading volume. So they just use the STO as a way of raising money. I think it's quite a bad way of raising money, to be honest, compared to a lot of the traditional methods. It's very, very expensive. If you're going to do a public issuance, there's currently no market whatsoever. So just about every issuance is going through private investors. Why do they need tokenization? Tokenization really is incredibly useful for providing liquidity, which is so, so, so powerful. But if we're choosing to not get listed on exchanges and just use this as a crowdfunding platform, I don't really see the use case. I think you take 99% of the use case away from security tokens. But what's interesting about it, as I say, a lot of people are talking about that at the moment. And maybe I'm just missing something really obvious.
Well, there will be situations where I said there'll be like these walled garden marketplaces, and we'll actually have to see how it rolls out. But if we can just stop and imagine for a second, there will have to be specific security token exchanges, and we already see some of those being built up. But can you imagine going to a security token exchange and there's 50,000 tokens listed? Because just think about all the companies, all the real estate projects, all the pieces of art, et cetera, et cetera, et cetera, that can be tokenized. And this is what we're talking about when we're talking about security tokens. Is basically, this is the tokenize everything world. This is not, tokenize air points. This is tokenize art and cars and watches and real estate and company shares and all kinds of other nebulous things we can't even imagine yet. That's all going to be tokenized. And so in terms of like companies, for example, you don't necessarily need to make that publicly traded. You can just issue it out to a select group of investors. Now you can have a public sale for that, but then it might just be OTC stuff after that. Or again, these kind of very select exchanges, that select markets that will arrange these sales. But if we can just imagine the insanity of how many tokens are actually going to be listed, it doesn't seem practical for a lot of exchanges. I mean, definitely the big crypto exchanges won't be looking at the security tokens. Most of them won't be compliant to do it anyway. And the ones that do become compliant, there will be geographic restrictions and all these different things. But even if we were just to imagine Europe, the amount of security token potential there, how many tens of thousands of projects would there be? So it might be more of a direct communication line, but we'll have to see, right? We're in such an early stage, it's hard to say how it's going to play out.
Yeah, the valuations are actually really interesting. I think a lot of people in crypto don't necessarily understand the size of traditional financial markets compared to how, like, we're this big, and that's exaggerating it. We're so unbelievably small. The crypto market is worth 130 billion. Stocks are worth 75 trillion. That is a crazy comparison. Bonds are 80 trillion. Derivatives are estimated to be nearly, according to some people at least, a quadrillion and a half. So that's 1,500 trillion. When we talk about tokenizing all of those assets, which fundamentally makes sense, because blockchain is just a fantastic tool for storing and trading assets. Forget Bitcoin, forget Ethereum, ICOs, it's blockchain, and it's incredible for storing and trading, which means how we're trading derivatives shouldn't be the same after this. It will take time, like it will take 10, 20 years for this change to occur, but we should go through a period of time where upwards, I worked out earlier, it was nearly $2 quadrillion worth of assets globally has the potential to be tokenized. They won't all be, like, that would be crazy to say that, but when we're talking about 2,000 trillion versus the size of the crypto market of 130 billion, it kind of shows, to me at least, the potential. I think we're in an in-between stage. I think right now people are interested by security tokens, but haven't seen the power of them and the use case. I think if we have another conversation in a year, we might just be talking about security tokens. I think it's going to be that big.
Well, it is going to be big, and there's obviously a lot of platforms that are catering to it right now. There's the Own Market and Polymath and a few different others. Which one is your favorite? Which one are you most interested in? Which one do you think is going to be one that captures a good portion of, actual security tokens being built or utilized via their platform?
Do you mean on the issuance side?
Yeah.
So step one.
Yeah.
I think that it's such a huge market. In the early days, there's no real competition between them. You could have 100 companies pop up tomorrow, and I still think there will be enough business for every single one of them for the next year. There is truly far too much demand for supply. So there'll be competitors someday, but I think we're a long, long way off that. And the good thing about financial services is it's never a one winner takes all market. For every financial service, we have so many different companies operating within, because we like to go and pick the ones we want to choose. It's not like Facebook, where we all have Facebook and it's the #1 social media platform. Totally different in financial services. Network effect is big, but it's nowhere near as considerable as something like social media or general crypto economics. So I think there's a few interesting platforms, but to be honest with you, I think anyone that's kind of proving themselves to have, #1, the ability to handle clients well. So I think demand comes naturally, but handling clients well and taking them through step by step, this is the process, holding their hand through it, that's key. Any company that's doing that is huge, because no one likes blockchain. No one likes to understand it. People just want, hold my hand, I'll walk you through the journey. And #2, it's the companies which have links to good exchanges. So as I say, liquidity is everything. If a company is able to do issuance, but they can't provide links to good liquidity exchanges afterwards, I don't see them keeping many of their potential clients. So, for example, I don't really want to name too many names. I like OWN personally. I think they've got a really cool end-to-end solution. I'm a big fan of Securitize as well, because they've tokenized the most, they're the biggest name, and importantly, they have a link with Shares Post. And that's the biggest pre-IPO trading platform in the world. So they're moving in security tokens. The liquidity on there is probably going to build well before T0 or Open Finance Network. If you're able to get links with them, that is the most powerful thing I think you can do.
Very interesting. And the big players, and I'm not super familiar with Securitize, but if they're an existing company that's doing these kind of things, we're going to see more and more of that. I'm imagining, we haven't heard any announcements from Bakkt yet, but I would suspect that those guys will also launch a security token issuance platform of some variety. And that will probably be slowly moving, I would imagine. I mean, just imagine at some point that the entire NASDAQ and New York Stock Exchange and all these different things are going to move to tokenization of these assets to save fees, to increase liquidity, all these things. I mean, right now, 9 to 5, Monday to Friday, public holidays off. What kind of market is that?
I know, with the internet as it is, and I can talk to you, and we're 11 hours time difference, and yet your market is open at a different time to my market. The idea of that is absolute insanity. It's actually interesting when you talk about issuance. For me, there's kind of a debate between issuance and exchanges. I don't know. I think there's a lot of potential for issuance in the early stages, but I think it's also going to get commoditized very quickly. It's relatively simple. It's having a bit of code, and then someone just goes through a process. We could set up a company tomorrow, get someone to code a lot of this stuff for us, and we have essentially a system which runs itself. And when you have a system that runs itself, you tend to end up in a situation where companies are competing on cost. And that causes, well, natural market forces essentially push out the majority of the market. So I do see a lot of opportunity in issuance to begin with. But I think then over the next, if I look 5 years from now, I don't see it being a huge play. I think 1 to 2 years, we're going to have some big companies that are going to come in and buy some of these successful issuance platforms. And that is a huge opportunity.
Yes,
but
that's true.
The biggest one is the exchanges, I think. So you look at something like NASDAQ on New York Stock Exchange, they're looking at this right now. And NASDAQ are building their own solution. But even exchanges that aren't publicly doing it are looking at this, and they know this is the future. If we're having this conversation, we're two random guys halfway across the world who study cryptos. These are guys who, on a daily basis, they go into board meetings with the smartest people in the world.
It's not like the CEO of the New York Stock Exchange is, damn, those guys are onto something. I should look into blockchain. Holy cow.
You might be my main follower. You don't know.
But you're right. The big companies are looking into it. And if they haven't announced, obviously Bakkt has announced that they're doing a whole bunch of things. They haven't said, hey, we're going to tokenize the whole stock market yet. But to think that they're not considering that's not a part of a conversation, that's not potentially in development. We see what JP Morgan's doing with Quorum. All these players, they are working on these things, whether publicly or, quietly in the background. And they'll announce when they announce, but it's going to be a big part of that ecosystem. But there'll be a whole parallel ecosystem that develops, because the stock markets, that's the traditional money. And obviously traditional money, whether it be the actual players themselves that run the exchanges or the family offices, the hedge funds, the pension funds, all these things, they're coming into crypto. They're going to make a big impact when they do. Their splash is going to be absolutely massive. It'll have a huge ripple-on effect. But the democratization of finance, that's what's going to be really interesting, because now we're going to be able to cross all of these barriers that have kept finance down on a global scale. I mean, it's all good for someone in the UK or New Zealand or the United States. That access to capital is pretty easy, relatively speaking, right? You still have to go out and do the legwork to get that capital access. But think about East Asia and South Asia and Latin America and Africa, Eastern Europe, all these places where getting finance is a lot harder. And they're now going to be able to access these international markets via these platforms. That's going to unleash immense amounts of capital.
Yeah, absolutely. If you're based in one of those countries, and I don't want to offend anyone, but would you rather invest into your own country, or would you potentially look at the American markets and see some interesting companies that are potentially private and choose to invest into those. I know which one I would personally pick. There are a lot of interesting private companies. And as you say, it's opening that up, which is very, very interesting. And it's a really good move as well. In terms of, you're talking about the morality of blockchain, opening up things, allowing little guys to basically get things that the big guys used to have, taking something away, sharing it with everyone else. Oversimplified, yeah, but that's the kind of, for me at least, the core ethos of blockchain. Private markets are the best investments in the world. They historically have been over the past 30 years. And the best way to set yourself up for life is to invest into the best markets. It's to take 10 to 15% of your salary every month and stick it into a market. That's what we should all be doing. That's how the rich get rich and the poor, unfortunately, stay poor. But they've also blocked us off to these private markets where only they can get in. And that is another huge element which, through security tokens, we can take away. And
That's
we can
right.
get into venture capital. We can get into private markets. And we can get into these opportunities, which otherwise we'd be sat on the sidelines thinking, this is the big money and we can't get involved.
And we see this happening across a whole range of things. You're going to be able to do $50. Hey, you'll be able to have a quarter of an Apple share or whatever it might be. And this is big because imagine calling up a broker and say, yeah, I'd like to put $50 on Apple. They're just going to laugh at you on the phone. And that's terrible because maybe I only have $50, but I want to invest and I want to start building my wealth over time. This is a democratization of that finance. And that's a really, it's funny because I wasn't even talking about that point actually, but it's really interesting that you bring it up because I wasn't thinking like, oh yeah, people in, Nigeria or something are going to be able to invest in, these US stocks in a much easier fashion. I was actually thinking in the opposite fashion that imagine all these companies and real estate projects in the developing world that are going to be able to access international capital in that kind of reverse flow where Americans might look out and say, hey, I'm looking for maybe a higher risk situation here that could have a higher return potential versus just going and throwing some money into Apple stocks. Maybe that's the core of my thing, and I've got some Bitcoin, some Apple stocks, but I want to invest in real estate in Lagos, Nigeria, for example, which is a higher risk investment. But now with this democratization of finance, we can actually unleash those markets as well and bring more finance and more funding and more business to these developing nations.
And it will be interesting to see what governments do, because I like the idea of that. I'm a big fan of anything which is choice. I don't think you should take choice from anyone. But also just saying those words kind of scared me. Investing into real estate in Lagos, there might be some great investments. But if I'm just reading a website based in a country I don't know, that's terrifying. And yet we've seen with ICOs, a lot of people will throw their money at virtually anything if they think it's going to go up in value. And worst of all, they'll commit more than they can afford to lose. Like, I'm sure you do the same thing. You say those words all the time, and yet we know people will always throw in more than they can afford. So it'll be interesting to see how governments step in and try to regulate this, because we've never really seen the public have access to markets with such little information before. That's what a lot of people are overlooking. With the stock markets, there's so much information. Like, you could go back to I think the 80s when Bloomberg came about, and you could be the guy with the edge because you had a Bloomberg terminal. That doesn't exist in the slightest now. Companies are trying to place their servers as close to the trading floor as possible to get a 0.01 millisecond advantage. That's the kind of competitiveness we've come down in the stock market. But what that means is you can't find an edge realistically. You have too much information. It is an efficient market and it prices everything correctly. I mean, some people may argue, but that's certainly some of the economic theories out there. Private markets are incredibly inefficient. No one knows about these companies, and you could pretty much post anything you want, and people could get misled incredibly easily. So as a government regulator, you look at Apple, and you're like, yeah, the market's regulating them. We're doing our things, but we know that the market is doing a good job of automatically pushing it in the direction it should be. With private markets, that doesn't really occur, and that's always been okay because only rich people can get involved. But what about, and they're supposedly the ones which know enough to be able to
sophisticated investors.
Yes. I hate that so much. I hate the whole accredited investor rule where some guy who's made a ton of money off selling paint or selling furniture in America is now rich, but has no idea about investing. But apparently he's more sophisticated than the two of us who have been studying this for some time. But yeah,
Exactly.
my point is it'll be interesting to see about, what do you think then about the government regulators? How do you think they're going to potentially view this?
It's interesting. I hadn't really thought so much about the regulatory aspect. I was thinking more about how the market's going to handle it because we're going to have scams. It's going to be just like the ICO boom with the STO market. There will be, not to be dumping on Nigeria here, but there's going to be property projects in Nigeria. They're going to be 110% legitimate, perfect, going to make people crazy amounts of money. And then there's going to be one that's a total scam. And that has nothing to do with Nigeria. That's going to happen in the US. It's going to happen in China. That's going to happen everywhere, right?
Yep.
The market will eventually sort that out via more trusted mechanisms, like we're seeing the move towards the initial exchange offerings. You know that when you go to Binance and you invest in that ICO, look, it may not make you money. It might because it's Binance, but you can know that the Binance team has at least gone out and they've met with the team and that there's something real there. It's not just smoke and mirrors. And so that's an important part, I think, of this entire equation. But in terms of the regulatory scene, oh, we're going to see such a mixed bag. We really are. We're going to see countries that still try to be at the forefront of this. We're like, Switzerland is still going to be right at the forefront of the STO market, and we'll probably see a lot of STO exchanges operating out of Switzerland, whereas countries like the United States will probably be flailing around, but going, but securities, everybody's got to be banned from this.
Mm-hmm.
Interesting thing is, of course, in most situations, they may not be able to stop them. I think there's going to be a lot of KYC that's going to be very geographically exclusive for a lot of these major STO markets, but there will also be decentralized STO markets that are going to actually allow for this global liquidity so that American investors can hold these security assets that the government says you're not allowed to hold.
The only issue there is that you may have regulations may stop Americans from holding it just because you have to have a share registrar. So you have to legally know who owns what. But where there is opportunity, there are always people trying to get around it.
That's right.
And,
I mean, if you can imagine a Nigerian company again, do they really care if Americans end up getting their thing and they, well, you're not supposed to have that, but the SEC doesn't have jurisdiction over Nigeria, right?
they try. They really try.
I'm sure they do. They're terrible.
The SEC will go anywhere to try and lay down their jurisdiction.
No matter
they don't
how
just
far, no matter how long, the SEC will find you.
You're not far up.
Oh man, it's crazy. It's crazy.
Yeah.
Well, Tom, let's go ahead and wrap our chat up there. This has been super interesting. Is the ICO dead? It's having a hard time for sure, but we're evolving, and I think the evolution is important. And where we're going to be in 5 years, anybody's guess, but it's definitely exciting. There's definitely so much being built that it's just an amazing time to be in the markets. So thank you so much for coming on today and sharing your thoughts. This has been really interesting.
Yeah, you too. I really appreciate your time. It was a really enjoyable conversation to learn what someone else in the industry thinks. It's always fascinating to know that you've done a lot of research, I've done a lot of research, and if we don't agree on something, it's not because of naivety or ignorance. It's two people coming from a different perspective. So it's always interesting to hear, number one, where you agree, but number two, where you disagree on the little points. I always find that very interesting.
For sure.
But yeah, I really appreciate the time, and I'm sure we'll do this again soon.
Will do. Thank you.